Hello, please enjoy this video. I work really hard on these voiceovers. I hope you enjoy.
Investing in Bitcoin, inflation tips. Investing in Bitcoin is a great way to protect your investment portfolio during times of inflation. Although it's volatile, it can provide a better inflation hedge than gold. If you're considering investing in Bitcoin, keep these inflation tips in mind. Inflation is a huge issue in the world, and it can cause massive losses for investors. Bitcoin is a digital gold. Bitcoin's white paper highlights its similarities to gold, which many analysts see as an inflation hedge. However, both assets have suffered sell-offs in the recent inflationary environment. In this article, we'll examine how Bitcoin and gold compare in price and whether they are similar commodities. What is Bitcoin? Bitcoin is a digital currency that's not controlled by any government or central bank. It's traded on peer-to-peer exchanges, and its price fluctuates based on supply and demand. The first Bitcoin was created in 2009 by a mysterious person or group of people under the alias Satoshi Nakamoto. Today, there are over 17 million Bitcoins in circulation with a total value of more than $100 billion. Bitcoin is an unorthodox asset class, but it can be a useful store of value for investors wary of mainstream financial systems. It has some similarities to gold, including its scarcity, since only a small amount is newly mined each year. Although more data is needed to make a sound determination on whether or not Bitcoin can serve as a natural inflation hedge, the concept of Bitcoin as a store of value is still compelling. Bitcoin has been compared to gold as a store of value, and it's easy to see why. Like gold, it's difficult to mine and there is a limited supply of Bitcoin available. However, the two assets are quite different in terms of how they are used. Gold has industrial applications and can be used for jewelry or other types of precious metal products. Bitcoin has no intrinsic value like gold does. Instead, its value is derived from its utility as a form of payment. Bitcoin's value is also determined by its scarcity. There will only be 21 million Bitcoins in circulation, and that number is expected to be reached in 2140. Although some people have compared Bitcoin to gold as a store of value, the two are quite different when it comes to price volatility. Gold prices tend to experience significant fluctuations over time. However, the price of Bitcoin has been much more stable since its inception. While gold and silver have long been considered inflation hedges, Bitcoin could completely change this thinking. Gold has historically been the best hedge against inflation, but Bitcoin's longevity and positive price movement have made it an attractive option for investors. Since its inception in early 2010, Bitcoin's price has gone up over 13 million%. It currently stands at $37,000 per Bitcoin. Bitcoin has had a tumultuous history. It was created by an unknown person or group of people under the pseudonym Satoshi Nakamoto in 2009. The currency deflated in late 2010 when its first major exchange, MTGOX, was hacked by thieves who stole thousands of Bitcoin and forced the company into bankruptcy. Bitcoin's inflation rate remains well below 2% by 2022 and will decrease with each new block that is produced. That's a far lower rate than the U.S. target inflation rate, and much lower than gold's average inflation rate for 2021. Bitcoin's inflation rate is also independent of government or central bank policies. The only factor that determines the inflation rate is the number of blocks produced. This is a simple yet powerful concept. The only variable that determines the number of Bitcoins produced is how often new blocks are added to the blockchain. Each new block contains a predetermined number of Bitcoins that will be released into circulation. Since it's impossible to predict exactly when a new block will be created, there's no way for investors to know exactly how many Bitcoins will be in circulation at any given time. The only way to determine the number of Bitcoins in circulation is by measuring the total number of blocks that have been added to the blockchain. This is why it's so important for investors to closely monitor the Bitcoin block height, which tells them how many new blocks have been added since the previous measurement. It's a better inflation hedge than gold. Bitcoin is a digital currency that is traded like a stock market. Its value does not directly correlate with gold's price, making it less effective as an inflation hedge. Moreover, its volatility makes it unlikely to be adopted as a store of value anytime soon. However, some investors believe it could be a part of an inflation hedge portfolio. Gold has long been considered the ultimate inflation hedge. Rising prices can trigger a rush to the precious metal as it is viewed as a safe haven. The demand for gold has always been higher than that of Bitcoin. However, Bitcoin is far superior as a form of payment and medium of exchange. Gold is not as easy to use. It can be cumbersome to carry around, and its value is tied to the price of goods and services. Bitcoin has one major advantage over gold: it's divisible. This means that you can buy a small fraction of Bitcoin without having to purchase an entire coin. For example, if you only want to spend $10 on groceries but don't have any cash on hand, then you wouldn't be able to do so with gold coins because they are all valued at $100 or more. While Bitcoin may not be a traditional inflation hedge, it has proven resilient to many attacks. Although it still has the potential to depreciate in value in the future, it has been increasing in value over time. Bitcoin may not be a perfect inflation hedge, but it does offer the stability and low risk needed to make an investment. Bitcoin is a deflationary currency, which means that its value tends to increase over time. This works in the same way as gold and silver, which are also considered deflationary hedges against inflation. The more people who use Bitcoin and other cryptocurrencies, the higher their prices will rise. While gold is still the traditional inflation hedge, investors are increasingly turning to Bitcoin as an alternative. Unlike gold, Bitcoin is a digital asset that isn't tied to a central bank or government. Thus, it is not subject to the same level of inflation risk as gold. This is an important aspect for investors when choosing an inflation hedge. As a deflation hedge, Bitcoin offers a safe haven when the economy is in a recession. When the value of fiat currencies such as USD falls, investors will often sell their assets and buy digital coins instead. This behavior can cause market panic and lead to further drops in fiat currency value. It's a high-risk investment in times of economic turmoil. The risk of investing in Bitcoin is high because the price of the currency depends on investor sentiment. The more investors who believe in its value, the higher the price will go. It also lacks inflation hedging qualities. And when the economy is in trouble, fewer people will be willing to invest their savings in risky investments. The oldest measure of risk is the standard deviation between asset prices and returns. The CBOE introduced this model in 2006, and it has a negative relationship with the S&P 500 index and the FRBP1 index, which measures the uncertainty in economic policy. The study found that Bitcoin was not a hedge in times of economic turmoil, and the currency has a high risk of losing value. The volatility in Bitcoin prices is due to investors' varying beliefs in the utility of the currency. Many investors see Bitcoin as a store of value, a function that allows it to maintain its value in the future and predictably grow. They see it as an alternative to fiat currencies and a hedge against inflation. The study was published in the UK. The study's methodology relies on a simple conceptual framework of the price of Bitcoin, borrowing the model of gold standards to test the prediction of the price. The authors show that Bitcoin's price is dependent on the amount of inflation, which has an impact on the opportunity cost of holding the currency. The model also uses the US dollar-euro exchange rate, which may not be relevant in predicting Bitcoin's price, since the exchange rate is driven by factors other than inflation. As such, the exchange rate does not provide a sound rationale for Bitcoin's price behavior. The authors also use a purchasing power parity model, which assumes that the price of Bitcoin is determined by the ratio of its market value to the sum of all goods and services in an economy. The study uses an estimated annualized inflation rate in the UK and US, both currencies' GDP per capita, as well as their exchange rate to predict Bitcoin's price. The data in the table below shows the price history of Bitcoin in relation to other macroeconomic and financial variables. The currency is prone to extreme price volatility during periods of high inflation. Inflation is one of the main factors that contribute to sharp sell-offs in market instruments. Moreover, the price of Bitcoin is also closely related to the performance of equities and currencies. The table shows that there is no clear relationship between Bitcoin price and inflation. The currency has experienced high volatility during periods of high inflation, but the correlation is not strong enough to support the theory that inflation drives Bitcoin's price. It's too young of an asset class to know for sure. Bitcoin is a relatively young asset class, so it is too early to tell whether or not it will perform well during inflation. However, there are signs that it may be able to act as an inflation hedge. Its price is very high now, and it has the potential to continue to rise over time. That said, it will not be an effective inflation hedge in the immediate future. There are many factors that could cause Bitcoin's price to drop dramatically, including government regulation and changes in adoption rates. This is why it is important for investors to diversify their portfolios as much as possible.